welcome to Nifty's weekly analysis video. So in this video, we do the analysis for next week and next session. We do the analysis with price action and indicators. Then we check Elliott Wave, and at the end, we'll check option chain. So last week, we discussed that Nifty would be dropping towards 17,430 to 400 levels. So that's what happened. And during the budget time also, it dropped towards these levels, but again, pulled back because 17,430 is strong support, and now the pullback is in progress. We are expecting Nifty to break 17,700 to 400 levels in Feb 2023. Yeah, and there is no guarantee of this, and yeah, it can go wrong as well. So watch out for that, and we'll discuss what is happening in this week. So these are the charts from previous. This is the chart from previous week that we discussed. And yeah, this is how we expected Nifty to move, and 17,400 has acted as a strong support. So now first check the price action indicators. The analysis that we discussed last time is like this. Here you can see the supports getting formed. This was broken in a week before budget, and then we had two touches near 17,400. Sorry, three touches here. One time it went below 17,400, then 17,450 during the budget day, and again from 17,000 it has taken the bounce. So now you can see here, these are our moving averages that we use. This yellow line is 48 EMA, which is currently at 18,000. This 13 EMA, Nifty has crossed it. It is around 17,822. So this has been crossed. So white line is 17,880, and this pink line is 200 EMA. Okay, so now right now Nifty is moving between 100 EMA and 200 EMA. It has taken support near 200 EMA, which is this pink line. And now what I'm expecting is, as it has crossed 13 EMA, which is short-term moving average, it can head towards this 100 EMA. This 48 EMA, which is again another short-term moving average. So it can go like this and can drop again on the downside. That's possibilities there. So RSI is still below 50, which is considered as a bearish signal, and Aron indicator is still showing extreme bearish readings, with red line of Aron indicator trading above 70 and green line trading below 30 is considered as extreme bearish zone. So currently Nifty is still in bearish zone, and we can expect Nifty to face resistance near 18,000. That's what we can conclude from price action and indicators. So here around 18,000, there will be max open interest as well. We will talk about that. But yeah, this is the area which we need to watch for, 18,000 to 18,030, that I need to watch for in a next session. So that's all on price action and indicators. We'll move to the Elliott Wave. So in Elliott Wave, previously we already discussed that we are expecting Nifty to be in a expanded flat correction, A, B, and C. It can come down, break below 16,700 levels, and then can give a sharp rally on the upside as a third wave. Another way to think that this move is a leading diagonal structure with 1, 2, 3 could have completed, and then we could be in a fourth wave. That's what we discussed, and then there is a chance of fifth wave. So this leading diagonal structure, this case is little bit now out of scope, you could say, because the price has broken 0.6 Fibonacci. If it was a leading diagonal case, then it should not have broken this by big margin. So it has broken by almost 200 points. So I doubt this case now, but it will still keep it for future references. And I'm not expecting now to any more top as a fifth wave in a leading diagonal structure. It could be something else as well. There is no doubt. If it makes another high, our wave patterns will change. But as of now, this case doesn't have a good support from the price, because the price has already broken the 0.600 Fibonacci. Then in previous weeks, like on Jan 1st, we discussed that Nifty could move like this. It moved exactly as we forecasted, and the structure is looking very similar to this. So this is what we discussed on Jan 22nd. This is 29th Jan, last week's analysis. There we expected Nifty to continue the drop in terms of gap downs, but the gap downs are completely missing. So there is a no move towards 17,000 or 16,700 to 500 zones. So this is not yet happened. So now also this impulse structure is in doubt as well, because usually third wave has the gaps and the gaps are clearly missing here. There are no gaps after it broken down below 17,761. So it's still in consolidation. So there is a possibility that the wave count could be something else as well. So considering this case itself of expanded flat correction, I will still assume that the drop could be a 5-wave impulse. And these are the two charts that are going to play for next week. But there are certain levels that we need to consider before we assume these charts. So here, this entire move can be considered as wave 1, and then this is wave 2, wave 3 here, 4th here, and 5th finished at 17,345. So now A wave will break this swing of 17,972, and then we'll have a B wave, again a consolidation wave. Probably it will be a triangle or a flat correction within this range between 18,000 to 17,761, and then it can give up move towards 18,300 or 0.600 Fibonacci. I'm not expecting a big move here apart beyond 18,300. So this is our one way. After this, there could be a corrective drop on the downside. The structure here internally does not look very impulsive in nature. So let me switch back to 1 hour chart and we'll see how the structure looks like. So you can see here, the structure doesn't look completely impulse here. So there is a chance that this could be some consolidation pattern and we could already be in C wave. So this could be wave B, which is looking like a triangle. And then we could be in a wave C heading on the upside. So how much wave C can go up? Let's check that. Let's check that with Fibonacci extension. I'll place it here, then here, and now here. Okay. So wave C has already is nearly going towards 1.600 Fibonacci. So we have to watch it. So 1.600 Fibonacci is coming near the previous top of 17,970. Okay, this is the top that we had last time, 971, 972. So yeah, this could be ABC correction. Okay, so this could be ABC correction, A, B, and C going upside. So this is possible, but there are certain levels that we need to watch for. So in this chart, I have mentioned if only Nifty breaks 17,972 as a wave, then only we can consider that it will go higher as a wave C. We just have to ignore the wave B. We just should not trade it. It will take 1 or 2 days for this consolidation to complete, and then we'll have a C wave. So C wave can get truncated. It may not be a bigger wave. Around 18,300, it should truncate. So this is how what I'm looking at as a first case in Nifty. So for this, what we need 17,970 to break. Second chart shows us a bearish case. Here we are assuming wave. These waves are 3-3 wave structure, ABC, then 2 ABC on the downside, then A here 4th wave completed, then A, B, and C. So 17,353 is can be broken if Nifty breaks 17,584. So in next session, this last candle's low 17,582. If it gets broken, there is a chance to slip further towards 17,300. So this is how I'm analyzing with the Elliott waves and like putting a little bit of price action here because the wave patterns are not that clear. Honestly, this wave count can also go wrong, and I'm still looking for any alternate patterns. But these are the main patterns that I can come up with after thinking about 1 hour. I thought on this, and this is what I thought. So do let me know in the comments what do you think. Also add the comments. Make sure you add the comments, subscribe to the channel. So that's all on the Elliott Wave front. Let's go to the option chain now. On option chain front, let me open the option chain data. So this is option chain data. A major range here for this expiry is what is this number? Yeah. So 17,600 is a major support and 18,000 as a major resistance. So this is the major range for this expiry, 17,600 to 18,000. Apart from that, what is the second biggest support? It's at 17,500. 17,500 is the second biggest support. So I'm not expecting Nifty to cross either of these, 17,500 or 18,200. Both of them will not be crossed. And yeah, break of one level will take Nifty to another level. So let's say if Nifty manages to break 17,600, okay, then easily 100 points dip can be expected on the downside towards 17,500. Beyond this, 17,000 can also get triggered, but not expecting this to happen. Just to tell you what are the possibilities with the option chain. On 18,000 side, the major resistance is 18,000 obviously, right? And after this, we have second major you could say resistance near 18,500. So again, break of 18,000 can lead Nifty towards this as well, or 18,000. What is this number? 200. Okay, this is the second biggest support. Sorry, second biggest resistance. So after breaking 18,000, it will come to 18,200. After 18,200, it can very well go towards 18,500. So that's all. There is not much to talk on option chain. I will just check the info part of option chain. Okay, so this is the info part. Here you see the volatility has dropped, and at the money IV is greater than IVP. Here they are expecting market to be bullish, and max pain is around 17,700. So these information on option chain and option data does not conclude much right now, because we are 4 days away from the expiry, and these data do get changed during the expiry, and it's very best to use option chain during the expiry day and not on other days. It will just confuse you. So that's all. I'll add the summary here. I will make sure that we cover all the aspects. If you still got any doubts, you can ask in the comments. We are always happy to clear your doubts. So thanks all. Have a great day ahead. Bye-bye.